Hey everyone, hope you're having a good day. My name's Andy. My channel is Finding Value. Today we're going to do our daily technical analysis, updated commodities, work our way through the dollar, yields, precious metals, and commodities ETFs that I follow. I'll interject my financial opinions as we go through it. And if you need help with anything, check out finding-value.com, where I dive deeper into these sectors, deeper into the individual companies to play this commodity bull market that we are rotating back into, I think, of what's coming here. We do have a coupon code Mayday that is still active if you're interested in using to get a discount. Let's dive in. Let's take a look, starting with the dollar. And to me, this still looks like it's good to go lower. We've got what I think is potentially a flag pattern or some derivative of it. That generally works its way lower. Similar to this pattern here, another one is forming here. A lot of the times what you'll see is you'll hit a peak. So you'll come up, your consolidations are pointed downward on these guys. And then when you peak, they are pointed upwards. So you get a lot of stuff pointing upwards here. And that's exactly what we have. And they are still pointed upwards, which makes me think that we could go lower. So the DXY, most likely, in my opinion here, is going to travel lower. So we're going to go lower in the DXY, and that's going to be a tailwind behind commodities and precious metals. Interest rates are generally the driver of the DXY going lower, and it's the relative monetary strength or weakness against these currencies because DXY is a relative strength. So looking at the 2-year, this still looks to me like we can roll over. We have a flag pattern basically set up and a potential move lower. Now, will this spark selling pressure in stocks? I think it will, and I'll show you what those charts look like. But we've broken out of this upward trend line to the downside here. There's our breakout. We're coming down, and on the daily candlesticks, we have this nice little kind of bearish engulfing almost showing up today. And we could, and we'll have to wait and see if this rolls over and what it looks like when it rolls over. Do we get large selling pressure, or do yields drop quite a bit where it sends us down below the support level? We'll have to see. We got the 10-year yield also kind of rolling over, getting some selling pressure. It's not huge selling pressure, though. So I'm curious to see what it looks like over the next couple of trading days. The 30-year also very similar. So we very well could go higher. It's possible. We entered this from the top side down, broke it. This could be a retest, and we could still go lower, or it's possible to get back up inside the pattern. We'll have to wait and see what that looks like. Right now, things look set up for potential move lower on the shorter end of the curve. Longer end looks okay. TYX TNX ratio, to me, this looks like we're ready to go, primed to go higher. The reason I say that is you have your reversal candlestick. You don't have much follow through, and it's just a consolidation. Yeah, I don't draw very well in these things. Just a consolidation where I think it's going to go higher. And that led into this consolidation where it's going to move on up. The uninversion of the yield curve, generally good for precious metals. TLT, which is bond prices, are up, yields down. We have a nice big bullish engulfing today that makes me think we want to go higher. So overall, I think bond prices are up, yields could fall, and that could also be leading to the market selling off potentially, because something, and we'll look at those charts because I've already looked at the charts. And the lowering of the yields would be a reaction to a slowdown in the market. People are seeking safety, is what I'll say. And that's what it looks like zoomed out, the broken down trend and the potential move higher. 2 and 10s, we uninverted a little bit, steepened, but we're right on support, resistance. The momentum in the short term is up, and it's right on resistance. Gold is up $37. It's running as expected. We've got the perfect tailwinds behind gold to continue higher. So that looks fantastic, and it looks good to continue on up. Silver up 1.5%. That also looks pretty good. We have a bullish engulfing here and today, and they both signal a potential move higher. And with gold moving higher, that's also looking pretty good for silver. Platinum up 2%. This was actually up the most today. We've been squeezing for a while in platinum. We just haven't broken that downtrend line yet. Wants to show up. There we are. So this one might not be as good if a slowdown occurs in the short term, but in the longer term, when this breaks with the commodity bull market, it's going to rip. It's going to rip and probably outpace absolutely everything after this slowdown dissipates. Palladium adds support. This is the out of cycle metal, and I think we're just going to go sideways for a while with palladium. It could also go lower if we see weakness in the markets. Definitely could go lower too in the short term. GDX looking pretty good with gold being up, so that looks fantastic to continue higher. And that's broken out of the longer term resistance, broken out of this flag pattern to the upside. That looks great. GDXJ also right underneath resistance, up quite a bit today. And we're going to take a run at that resistance level, I think, here pretty soon. And then SILJ up also 3%, looking pretty good. That's above a lot of support, which is all down here. And we are underneath a lot of resistance, which is the blue line above us. XEU to gold ratio, gold and silver mining companies outperforming gold, up 1.6% today. And we are well positioned above the trend line to break out to the upside. And we are coming from really low valuation levels. Crude oil up 3.6%, surprisingly, and we're right underneath resistance. We have not broken out of this resistance level here yet, but we could. That's something to watch here. We can break to the upside. TTF gas down a little, down 1.1%. Does look like we could get a little bit of a wick at the top here, which we have, which means we could roll over in the short term. Nat gas at 1.5%, a little bit of a wick at the top. We'll see if we roll over or not. But momentum just recently freshly broke out of this downtrend. Boy, XOP, yeah, you know me, up 1.4%, right on the neckline here. Or I should say the trend line, this trend line here, not the neckline. The neckline's this one up here. Is this going to continue higher, or are we going to come and shoot out lower? What would cause that? An overall market sell-off and a lowering of interest rates could cause this to still sell off for XOP. It's possible. I'm not calling for it. I'm just saying it's possible, and I'll show you what the other charts look like later on. And usually when you're sitting next to these large selling pressure candlesticks and we're barely making our way up back to the resistance, we could roll over, and that's something we can watch for. We haven't broken out of that pattern yet on crude oil either. OIH also up a little bit, but this kind of looks almost like a bearish formation that could potentially head lower. That is still in the cards at this time. Newcastle coal futures looking pretty good, up 1.3%. And that looks like it could continue higher, depending on what TTF gas does. Sprott Uranium Trust down 3.21%, getting a little bit of selling pressure here. And we're at the lower end of this channel that we're trading under. We've got uranium futures pricing, which is right up in the corner here. You can see it right on the corner there. So that is still a bullish formation. It is a falling wedge, and we'll see if it breaks to the upside. We have a little bit of buying pressure in the uranium sector, but this could easily roll over. Let's wait and see. Same with URNM and same with URNJ. We've been trading sideways, but we entered this with some good downside momentum. And with the overall markets rollover, this could roll over with it in the short term. Copper up 2%, looking pretty good, bouncing off support. There's support underneath us there. COPX up 1.32, up a little bit. I wouldn't say this is let's watch the overall markets first. We'll go through that. Iron ore right on support. It's holding on. We've got aluminum up 0.52%, which is on support. And then nickel up 1.32%, but I wouldn't get too overly bullish. I would just be patient. Momentum still downward, and we could be coming into some pattern that breaks to the downside still. Mu, down a little bit today, down about 0.5%, right underneath resistance. This could roll over. We could look at this as like a flag pattern. We've got emerging markets that are also up on weaker, we had weaker dollar, right? Yeah, weaker dollar and yields. And then KRE down 0.92. This looks like it wants to go lower. We're getting a couple of bearish engulfing patterns here and here. So we could see a little bit of lower price in the short term. And it is jumbled up. It's a flag pattern, inverted. TAN down a little bit, still holding on in this kind of slow leak off of death. We've got lithium down 1.7%, sitting right on support. Again, we'll see if it holds. REMX down 1.7. The momentum is still to the downside, and patterns are still angled upward, which is bearish. Continued downward move is what I'd say there. Baltic Dry Index slightly lower, but we're at that support region. We've got XHB, the home builders, and these do look like we could see a continued move lower with a potential break to the downside. And that would be the overall markets, slowdown in the economy potentially, and maybe interest rates continuing to decline, it means people are seeking safety. But we do have support. We can throw a support level through here, coming through here, which we did bounce off of, and we'll see if that holds. We could come back and retest that support level right underneath us. Russell 2000 down 0.91%. This does look kind of like we could break down to the downside for the Russell. We have a nice big bearish engulfing here as well. We've got the S&P 500, and again, these all look bearish to me, guys. You come up into a rising wedge, you break to the downside, and then you've got squeezing of another rising wedge, which ultimately could break to the downside still. So still looking at this from a bearish perspective since we broke this rising wedge to the downside. Now we have another rising wedge. NASDAQ has the same thing. Throw over top to a bearish engulfing, broken back within the pattern, broken out of the pattern. And now we've got another rising wedge, which is most likely going to break to the downside. So that's what I'm seeing there for the NASDAQ. And this moving lower correlates well with lower yields and could potentially drag down some of the commodity sectors too, which also have flag patterns that are inverted. SMCI is up 6%, and I think people put too much stock on the size of the move. This is still in a downtrend. So SMCI is still in a downtrend. We've got NVIDIA of 4%, but again, I'm not convinced that this is going to work its way up. I think we could easily head lower here. And we've got lots of bearish engulfings all above us. So here's another one here. So this is still a bearish formation. We could easily go lower here, depending on what we get, tomorrow in trading. Bitcoin looks okay. Still in this big flag pattern, and it is angled downward. So that looks okay. And then Ethereum's up 4.5%. That actually looks good to go higher. From this formation, the big buying pressure, bullish engulfing, coming down into another bullish engulfing. That looks pretty good. But that's what I'm seeing for today, guys. So give me a thumb up for the content. Subscribe to the channel. Subscribe to the website if you'd like. And that's all I've got for today. We'll catch you next time. This is Finding Value.